Dollar General imploded off of bad earnings last night. IREN clinging to its move from yesterday, not as strongly as I would expect it to. Core PCE came in this morning and the news was good, but markets aren't exactly flying high off of that news. Nvidia is moving up off of it, but not everything is. Let's take a look here. So first of all, July PCE came in at 2.5%. The expectation was 2.7, so that's softer than expected. We'll see how that is going to be digested here over the next couple of days. This is the personal consumption expenditures price index. And then when volatile food and energy costs are factored out, which is what the Fed prefers, it is 2.6, not 2.5. Anyways, the PCE price index for July increased by 0.2 for July. We can see the expectation was indeed 0.2 for July, so that came in line there, while the core PCE came in at 2.5, which was slightly lower than expected. I don't know what this is related to. The personal income nominal. Does that mean that people are making less money by 5% in July than they did in June? Because that's concerning if that's what's going on there. But what we're here to talk about today is this. Dollar General. So they had bad earnings. They came in, they missed by 5% and 1%. That's it. That's all they missed by. I'm sure they had bad guidance as well to drive it down, but they lost 32% yesterday. They dropped. That is a 32% gap here. Look at these Bollinger Bands. They're just like going tight and then they're wide open here. So the thing that's interesting about this today, one, this is a recessionary play. Like, this is generally considered a defensive stock. Okay, versus something like I don't know the ticker for it, but Ulta. Ulta is another defensive stock. Yeah, Ulta Beauty. Let's take a look at their stock. They came down a little bit yesterday by, no, they were up yesterday, and today they're down by 2%. So that's interesting. They'll probably get caught right around here. Let's go here. I would be looking right about here for some type of reversal. I know I just do this when I look at charts now. 332 to 325. I'm looking for it to come back up and test this area back again. But compared to something like Ulta, down 2%, right? I mean, they've been coming down for a while, but as we heard sometime in mid-August, investors like Warren Buffett started buying Ulta. So I've got my eyes now on Ulta here. I'm paying some attention to it as well. But that's not what we're here to talk about. Dollar General. It's a dollar store in the United States, right? Most people are aware of that, I would think, that are watching. They fell by 32% yesterday off of bad earnings, bad guidance. This is considered a recessionary stock, a defensive stock, and it is doing bad at a time when you'd think defensive stocks would starting to do a little bit better. This is bad news bears right here. Don't like this at all. So the only what I would want to see today is either this price climbs up halfway up this candle, which would be coming up to 87.87, and if it can't do this in the next couple of days, preferably today, but if it can't even touch that line in the next couple of days, that's real bad. It's going to revisit the lows here, maybe even go lower if that's the case. Let's look at how this compares to Walmart, another another discount retailer. Walmart's doing fine. Look at them. I mean, their price here is, they had good earnings. Look at this. They came in like barely beat, but that was enough for them to get a 6% pop. Meanwhile, Nvidia beats by 6% and they drop 10% in after hours. Doesn't matter. Anyways, so we're looking at Walmart here. Might come down. It might come back down to like 72 or something, but like, it did a nice rise. Walmart's on the rise. That is also a defensive recessionary stock that people flock to when they can't afford the more expensive things. So the fact that Dollar General, a dollar store, is falling apart, like absolutely falling apart, is a interesting and concerning thing. Something, what do you think about that? What do you think that means for the economy? Is this an isolated incident of a poorly run company? Or is this indicative of something more sinister going on under the hood of the economy right now? I'm not certain yet. I'm still thinking about it. It's only been a day. I need some time to digest this sort of thing. But it's concerning. It's concerning to see, but I will need a little more data to think about it a little more thoroughly and decide what I think about that particularly. Let's go look at IREN today. IREN kind of holding on to this move here. Not as strongly as I would have hoped. I would have wanted it to see it kind of crawl up over 876, like if it doesn't do that right here, I want to see it get over this. Let's make that green. If it doesn't get over that and close a candle and open it over again, then we are open to closing this gap down here, right? So we are open to coming back to $8, maybe even touching $7.93 before going back up again. We need to see that in the next couple of days. The next couple of days, we need to see IREN up over 875. It needs to close a candle above 875, open the next one over 875. Otherwise, this move that we saw will be something kind of like, you know, the big pop up and then the deflation down. And then from here, we might come even into these wicks down to like 761 or so, and then we'll see what happens there. If it bounces there, that's good news, but then it is confronted with 875 again. It has to get back above that. If it fails there, then we're just doing this. We're doing one of these for a while until Bitcoin decides to do something interesting, okay? So that's what we're looking at with IREN right now. IREN is really the only one I want to talk about right now. Maybe look at CleanSpark. How's CleanSpark doing today? That's the one I've been sounding the alarm on for a little while, IREN and CleanSpark. CleanSpark, ooh, okay. Not the worst thing I've ever seen out of CleanSpark. So this candle that we're getting today, if it closes like this, and in fact just goes a little bit higher, that's a hammer at the bottom of the move. Much like this over here was a bit of a hammer at the bottom of the move on August 12th. And what happened? It crawled up from there. So we could see this crawl up from here. But in order for us to be back into bull territory, back to the bulls, we need to get above, and we need to close a candle and open one above 1265. We need to do that. Before we do that, we are trapped between 1265 and $10, maybe even lower. Okay, if we go below $10, then we're opened up down here again to that 860 level. I think I'll actually I got to review that. Maybe I should make my my buy order like 880, 875. Yeah. And I'm getting that from the bottoms of these candles back over here. There's some wick bodies that close right at 875. 877 might actually be better. Let's make that white. I got that from over here. Back over here, this little formation right here. That's where I got that number just now, right there. Okay. Okay. So with CleanSpark, we're looking for that. When CleanSpark wakes up, it's going to wake up kind of like it did back here. This is what we're looking for. This is exactly what we're looking for, actually, right here. This kind of thing. We're looking for something like this, right? Where it just gets left behind, where we kind of start consolidating. We do maybe like a cup and handle or an inverse head and shoulders or something like that, and then or a double bottom, and then we just launch. That's what we're looking for in CleanSpark. We're not there yet. We're not there yet. We're getting there, but we're not there yet. See, this formation here is very different from that right now. This was a bear flag right there, and that bear flag broke to the downside. Now, we do need to get under $10 in order for that bear flag to really be something bad. But in the meantime, we're going to fluctuate between that $12.65 and that $10. Until we break either side of this thing, we're not really going to go anywhere. And when we break to the downside, it might be like a quick flush and then a fly back up. And if we go to the upside, it could be a gap up and go situation. But basically what I'm looking for is like bottom, right, come up, bottom again, and then I want to see it come up, break 265 decisively. I know I drew that way above 1265, but I need to see it break that decisively and get into $15 without trouble. If it struggles at $15 too much and comes back to 1265, that's not the worst thing ever, but I still don't love it because it, it leaves us in that indecisive period for a little longer. And then once we do that, then I'd be expecting it to then really fly and see us back in the 20s, maybe even higher again pretty soon after testing 15, retesting like 1265, maybe $13, and then running up into 18 real fast from there, and making 18 and just leave. I want to see CleanSpark just leave this whole formation in the dust here around November. That's what I'm looking for on that. Anyways, that's all I've got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description as well as the channel bio, and have a profitable day.